Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? All right, there's a lot of movements in the market. Crypto's doing what I thought they might do. And we have to talk about the truth when it comes to the border crisis and what it means economically. But before we move into the news, do me a favor and hit that thumbs up button. And if you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. So recently I've been talking about crypto markets following the Wyckoff chart. Bitcoin has been following it since, 2017. You can almost line up the charts, not exactly, but pretty dang close to it. So if we're following the Wyckoff chart when it comes to Bitcoin, it has Bitcoin and other cryptos getting ready to take off after the first week of February. Since about the 20th of January, cryptos have all slowly but surely been creeping up. So last night I said we should probably experience one more dip before we start getting into the positive movement trend. And sure enough, today we're seeing that happen. It took a nice little drop, nothing major, but this is normal when it comes to this Wyckoff chart. So here we are, we're in February the 2nd. We have the rest of this week and all of next week. If the Wyckoff is correct, it's after next week we should start to see cryptos move up and continue to move up into new record highs. That's if it continues to follow the chart. Like I said, there's other factors this time around that weren't there before. So right now we see Bitcoin at $37,614. Ethereum's at $2,711. Cardano's at $1.05. XRP's at 61 cents. Polkadot's at $19.56. Dogecoin's at 14 cents. Shiba's at 4021. Solana is at $111. So one of the questions that was asked to me, okay, if I am right and it does follow the Wyckoff chart, what cryptos, in my opinion, are going to be great investments? So when you look at cryptos, and most people that don't know what they're looking at, look at the dollar amounts. That's one thing. So if Bitcoin goes up $1,000, $2,000, $3,000, they get all excited. Hey, well, you should be excited. And then you look at something like, I don't know, let's take, for instance, Cardano. It's at $1.05, right? But then Cardano goes up to like $3.15. So you're going, yeah, but Bitcoin's better, went up 3,000. Yeah, but it's a small percentage. 3,000 is somewhere like, I don't know, what is that, about 4 or 5% overall gains? But you look at Cardano, if it's up from $1.05 to $3.15, that's what is that, about 300%? So in other words, if I put $100 into Cardano, then I have $300. But if I put $100 into Bitcoin and it goes up about 5%, well then, congratulations, I have $105. Do you see what I'm talking about? Pay attention to the percentage changes. Having said that, some of the cryptos that I think, and this is just my opinion, you guys know I'm not a financial advisor, that all the information that I have is my own opinion, and I just share it freely. The coins that I have been talking about and keeping an eye on, like Cardano, Solana, Polkadot, I don't talk about it, but Polygon is another one I'm watching. Those cryptos, I think, really have a ton of growth opportunity. And at the moment, I think something like Cardano and Solana are actually undervalued big time. It's your personal choice. The safe bet is and always will be Bitcoin and Ethereum. Those two aren't going anywhere. I think Ethereum itself is undervalued. They are the platform of choice, period. Everything that's being created today is done on Ethereum. And then you have the new Ethereum version coming out. Not to mention, they are the platform that is chosen for the quantum platform. And they're already being adapted for the new quantum platform. Ethereum is. No other platforms are being fitted for the quantum platform. And that's a big jump forward. So Ethereum, I told you, eventually it's not only going to catch, but it will eventually pass Bitcoin in value just because of all the use cases for it. So, I mean, my bet is and always will be on Ethereum. But if you're looking for some possible major gains, then definitely Cardano, Solana, Polkadot, and Polygon are the ones to really keep an eye on. Those ones you can consider buying into. Solana's already at $111, where Cardano's $1.05. So if you're looking for a bigger upswing, maybe Cardano because it's so cheap at the moment. But Solana, I think, and Cardano, those two are definitely a must-have in your portfolio. Okay, that's just my opinion. Saitama sitting at 7028, it's up 2%. Over the past hour, it is negative 2.9%. Over the last 24 hours, it's up 2%. Over the last 7 days, its average is positive 19.5%. Over the last 14 days, average is down 21.7%. And over the last 30 days, it is negative 44.8%. So when you see these 1 hour, 24, 7 days, 14 days, 30 days, and I'm saying on average, what they're doing is they're taking the number of these days, adding them together and dividing it and come up with the average, and that's where they are. You can see Saitama wants to take off, and every time it starts to get a bump, it drops down. I mean, they are fighting a ton of negative news, and they need to get their crap together. Once they get that SATA mask really going and the new tokens are launched, this sucker will take off, because every time they think they have it fixed, you start to see Saitama take off again. And then all of a sudden, another glitch will happen and it drops right back down. So as soon as it gets up and running and there's no more issues, Saitama, I anticipate taking off in a major way. So again, cryptocurrencies, we got the rest of this week and all of next week. And then sometimes right after that, we should start to see cryptos move if indeed it is following the Wyckoff. Now, I'm not saying it's exactly going to move in that time. There has to be some buffer days there, but give or take a week. How about that? It might be a week earlier. It might be the end of this week. It might be a week after, which is sometime after the middle of February. But the Wyckoff, there's some wiggle room there, because I know how people are. I'm saying sometime after the first week, and then all of a sudden, an additional 4 or 5 days go by and it takes off. They go, what do you mean? You said after the first week. No, you know what I mean. But definitely sometime around the middle of February, you'll see crypto start to take off. The jobs numbers report is hideous. People are talking about a labor shortage. We're looking at an unbelievable number of unemployed people. Again, keep in mind, this is a third term of Obama. This isn't Biden's. So Obama went right back to doing what he did in his first 2 terms. And what is that? Falsely reporting unemployment numbers. Again, what they do is they take the number of people that have run out of benefits and they consider that going back to work. If you really want to see how the market's doing, go look at the job participation numbers. It's way down. And you can see the number of people who are really out of work. Now it's a combination of things. It's a combination of people who are quitting their jobs because they don't want to comply with the mandates, and those individuals who just don't want to go back to work because they're being paid more to stay at home until the benefits run out. So the participation numbers are going to be low. So silver's at $22.66. Yeah, metals has been on a fun ride. Unlike a lot of other people, I'm not caring about what I see on the paper market. I'm not focused on that. Right now, to me, the powers that be are purposely suppressing the values of gold and silver so they can store up on it as much as possible. We see that happening all the time. So I'm doing as they do. I've always been doing that. Like I said, about 96% of my holdings is in precious metals. That's just me. But I'm going to show you why it is. For the past 2 years, I've been suggesting to people they move 25, 30% of their money into gold and silver. But if you're watching the dollars, you're probably going, oh my God, Pimpy, I could have had more money had I not done that. No, you're not. You're not seeing the bigger picture. And I'll show you it here in just a moment. So since January the 20th, silver's down about $2. And it's been hanging around at $22.60 range, somewhere around there. The metals markets are poised to break out in a big way. Gold is at $1,800. And if you haven't been paying attention, every time they really smack the price down on gold, it just turns around and rebounds pretty quick. And gold, ever since January 25th, when it was at 1,851, as that sucker was climbing, you knew they had to do something, because gold was quickly, and I mean quickly, heading right over towards that 2,000 mark. And then all of a sudden it dropped from 1,851 and lost about $70 off its overall value. But Again, it's slowly but surely creeping back up. We're at the $1,800 level again. Every time they bring it down below 1,800, it doesn't take very long for it to rebound and start getting above 1,800. Again, gold and silver is posed for a major breakout and have been for a long time. The inflation numbers are incorrect and it's more in the double digits. And you're seeing what's going on with the labor market. It's a combination of things. Not to mention, there's so much distraction out there in the news that people are not paying attention to the stock market. If you've been listening to me for a while now, you know I've been warning people that they should consider moving money out of their 401ks. Trump used to joke that, hey, you know, the husbands are going home and they look like geniuses telling their wives, look at our 401ks, look how much money we made. Well, that's when Trump was in office. Trump is not in office. 401ks losing money. Here's why you shouldn't panic. Oh, you should panic. And this affects your overall savings. If you thought you were ready to retire in 3 to 4 years, in case you haven't looked at your numbers, it's changed a little. All of a sudden you go, well, maybe not 3 to 4 years, maybe a little bit later. Say recent stock market volatility may have you worried about your 401ks. Yeah. You shouldn't rush to unload your stock holdings, especially if your retirement is many years away. Well, why is it that billionaires are all selling off their stocks? And I'm not talking about just in their own companies. Elon Musk just offed all his PayPal stocks. Why is he unloading all his PayPal stocks? I told you with the rich dudes, they know a crash is coming. They start selling off their stocks. I showed you, what is his name? Michael Berry's portfolio. He's like 94% of his stocks were all sold off. What are they doing? They're positioning themselves. They're liquid. They're going to wait for the market to crash, and then they'll buy back all the same stocks, but at a much cheaper rate, and they get more stocks because it's on sale. That's how the rich stay rich. They all talk amongst each other. You know what I mean? I'm pretty sure they have, insider information. When you see somebody like Elon Musk, Jeff Bezos, Bill Gates all selling off their own stocks, they'll make up some stupid story like, oh, they're going through a divorce. Oh, they're doing this for one reason or another, because they don't want people to panic and start selling the stock off as well. That's their way of trying to keep the market from crashing, especially in their own company. No, they're selling off because they know it's inevitable. The crash is coming. When it says you shouldn't rush to unload, then why are billionaires doing this? It's been a rough week for stock investors as volatility rocked the market. If you've been peeking at your 401k plan balance, you may be seeing lower numbers than you'd like to. And that could be nerve-wracking. Yeah, well, that's what happens when you watch the market every single day, every hour. That's the same with gold and silver. That's the same with cryptocurrencies. But while it's certainly unsettling to see your 401k plans lose in value, and I've talked to people that have lost 30 to 40% of their holdings over the last 9 months. To some people, that may not sound like a lot. To others, that could be a difference between retiring within the next few years and having to stay working for another 10 years. I mean, that's a huge loss. And if you look at gold and silver prices, they haven't lost or gained very much at all. They've been very stagnant. So had you move 25, 30% of your money is into gold and silver, it's protected. It's just sitting there. And it's not losing its purchasing power like we're seeing your stocks. Why? Because they're fiat money. The stocks are. They're fiat paper money. And we're seeing inflation eat into that. Since the purpose of saving money in your 401ks is to amass a retirement nest egg. Now, if you're just a few years away from retirement, you'll need to be careful about going too heavy on stocks in your portfolio. Really? You don't say. That's why I've been suggesting people to consider shifting part of their holdings into gold and silver. But it goes on to say, but if your retirement's decades away, then a blip like the one many investors are experiencing now shouldn't rattle you too much. While there's some truth to that, some. But you see, it's not just a blip. We're talking about a full-on, full-fledged entire market crash that we're looking at a decade, maybe longer, before it even starts to recover. So for you to get back to where you are now, it's going to take more than just 1 decade. It's going to take a long time for the market to recover from the values that there are now. That's what I said before. If you ever noticed during the market crash, gold, silver, stocks all dip. Sure they do. But stocks take forever to recover, where gold and silver not only recovers quickly, but then passes up and reaches new record highs. So this is what the person is suggesting. It says, while the recent volatility certainly shouldn't prompt you to give up on the stock market, it may serve as a wake-up call to make sure your retirement portfolio is targeted to your age. If you're not quite on the cusp of retirement, but are getting closer, take a look at your assets and see how they're allocated. If you're heavy loaded on stocks, it may be time to start shifting towards bonds. No, that's terrible advice. The bond market is in a bubble too. And see, meanwhile, if you're expected to retire within the next couple of years, you'll definitely want to shift at least 40% of your assets out of stocks and over to bonds. No, how about 40% into gold and silver? Way safer bet. Not bonds. So here they're even talking about moving out of riskier assets, which are stocks, for your 401ks. Although this person's suggesting bonds, I wouldn't go that route. Is the market crashing? I told you, whenever you look at these different markets, whether it's the Russell, NASDAQ, S&P 500, the Dow, what they do is they take the top performing stocks as the reporting numbers, totally neglecting the rest of the stocks that are down below. But there's a problem. Number of NASDAQ stocks down 50% or more is almost at a record. 40% of the index firms have fallen by half from 1-year highs. Already, this is why you're seeing hits in people's 401ks. So while the Fed artificially pumping up the stock market, keep people from panicking, it's not the Fed's job to play with Wall Street. The Fed's job is to focus on the economy. And that definitely has been shifted since 2008. The Fed should not be interfering. See, here's the thing. A lot of these things that we're seeing happen, people should be up in arms over. This is the government really screwing people over. Although they get to play around with insiders traders information like Nancy Pelosi, who's making hundreds of millions because she gets information long before the public does, we don't get that benefit. And if we did it, we would be arrested and thrown in jail like Martha Stewart for insider trading information. But yet our politicians get away with it. Them lying about the employment numbers, them lying about our inflation rate, them lying about the truth about the labor market. We should not be tolerating, but we do, because we have too many other things going on. And because of it, we're starting to see the results of them interfering. It's damaging, and it's going to take a long, long, long time to recover. People are talking about a coming recession. How about a coming depression? 40% of the index's firms have fallen by half from 1-year highs. Investors are selling first, figuring out rest later. Yeah, I told you guys, when you see these billionaires all selling off, do as they do, not as they say. They're not just selling their own company stocks like Elon Musk selling Tesla, Bezos selling Amazon. I mean, they're selling other stocks. Elon Musk just sold his position on PayPal. He's been selling his homes. What did he say? Because I want to live a simpler life? No, he knows the housing market is going to crash. So if I have 3 homes worth $100 million and I sell them all, I just wait for the market to crash. And those same homes that I sold for $100 million, I could probably pick up all 3 for somewhere around $40 million. And then have another $60 million to buy more property. See how the rich get rich? It's still not too late. And I know some of you are hodling. You're holding on because you're afraid to either miss out on a recovery or you keep hoping for recovery. And that's how people get screwed out of their money, because they're holding on, and before long, they're down 60, 70% of their value, and wishing they would have done something when it was 50%. So now's the time. Why you procrastinate, I don't know. Reach out to Money Metals. So now is the time to remind you guys that, again, protecting yourself is a wise move. You should consider moving 25, 30% of your holdings over into gold and silver. And when you go to make that move, give a consideration to our friends over at Money Metals Exchange. The link is down below in the description. If you're a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and you'll get a free half ounce of silver. But if you're not sure how to do it, give them a call. They can be reached at 1-800-800-1865. Town Pimpy sent you over there, and you're looking to protect your 401ks and your IRAs. what do you need to do? And they will help walk you through the process. Well, looky here. This is what I'm talking about. Just to give you a couple of examples. The Qualcomm, a value stock in 2022, punished share prices another negative 18%, pushing the stocks 50% below its peak value in just 6 months. So Qualcomm has lost more than 50% of its value in just 6 months. Not to be outdone, why Amazon stock fell 10%. Amazon stock closely mirrored Nasdaq's moves. Its shares price plummeted by 50% in the last 3 months. So you got Amazon. Why do you think Jeff Bezos sold his shares? Because he knows his own company is going to take a hit. So it could be that these CEOs selling off such large amounts of their shares are causing a lot of these stocks to fall. I'm sure that's contributing to the stock falling. But again, they're doing it for a reason. So would that person suggest that you go into bonds? Inflation and deficits don't dim the appeal of U.S. bonds, really. Treasury rates remain strikingly low, partly because of the safety government debt offers corporations and retirees. Whether that endures is crucial to federal spending. Anyways, the markets are just really getting flipped on their heads. The Federal Reserve is taking steps to cool off the economy. And headlines are proclaiming that government bond yields are near 2-year highs. But the striking thing about the bonds isn't the yields, which influence interest rates throughout the economy, have risen. It's that they remain so low. In the past year, with consumer prices rising at a pace unseen since the 1980s, a conventional presumption was that the demand for bonds would slump unless their yields were high enough to substantially offset inflation on investors' portfolios. Yeah, that's right. What good is it if your inflation rate's at 10%, but your yield's at 5%? See, in order for them to do something about inflation, the interest rates have to match the inflation numbers. So they're claiming that we're at 7% inflation. That means the interest rates have to get somewhere around 7%, or you're still losing. The interest rates have to counter the inflation. His bond purchases remain near record levels anyway, which pushed yields lower. The yield on the 10-year Treasury note, the key security in the $22 trillion market for the U.S. bonds, is about 1.8%. That's roughly where it was on the eve of the pandemic, or when Trump was elected president, when inflation was running at 1.7% annual rate compared to 7%. So do you see what I'm talking about? It says the bonds were at 1.8% when Trump was in office, but also inflation was at 1.7%. So the bonds are gaining over inflation, not by much, but that's how it works. Except for the bonds are still around 1.7%, and inflation is over 7%. What does this mean? What happens for people who are bondholders? This is because the 10-year Treasury yield is a benchmark for many other interest rates. The rate on mortgages and corporate debt have been near historical lows as well. And despite a binge of deficit spending by the government, which standard theories say should make a nation's borrowing more expensive, continuing demand for government debt securities has meant that investors are, in inflation adjustment terms, paying to hold Treasury bonds rather than getting a positive return. Yes, if you take in consideration the inflation numbers and where the interest rates are, if you buy the bonds, you're paying the government to own the bonds instead of you earning off the bonds. This is why a suggestion of moving 40% of your money into the bonds is a bad idea. Move it into gold and silver. Here you go. Why have Musk and other CEOs been on a stock selling spree in 2021 and is continuing in 2022? 2021 was a year of insider selling as many CEOs disposed of their shares. According to the Bloomberg report, some of the richest Americans sold off shares worth $42.9 billion through early December, which was more than double the shares worth $20.2 billion sold off in 2020. So look at, even in 2020, they sold $20.2 billion, and then it more than doubled in 2021. That should be telling you, do what they do. Not what they say. Elon Musk, the CEO of Tesla, and considered the richest person in the world, has been on a stock selling spree. Yeah, really? In November, the CEO took a poll on Twitter. Yeah, took a poll on Twitter, asking people whether he should sell 10% of his Tesla shares to pay taxes. He sold it, and he still has not paid the taxes. So again, that's just a way of giving an explanation why you're selling so much of your stock without triggering a panic. So it goes on to say how much shares were sold, and then it says that this is the first time that Musk has sold shares since 2016. So this article goes on to explain why a lot of CEOs are selling off is because the Democrats are now in power. They want to raise taxes on everything. They want to raise capital gain taxes. And so everybody is turning around and quickly selling off so that they can avoid the higher taxes. But that's not the only reason. The main reason is they're preparing themselves for a market crash. Look at Bezos sold off. Zuckerberg sold off. Spiegel sold off. These are really super rich people, all of them positioning themselves to take advantage of a crash market. Jack Dorsey sold off. Do as they do, not what they say. They're not selling for tax purpose only. The majority of them are selling so that they don't take a major hit when the market crashes. What is the real reason for Democrats to allow so many illegal aliens coming here? It's not just because they want them to vote Democrat, as they all push to allow them to vote, by the way. If you allow a flood of illegal immigrants to come here, then you have a cheaper labor force. Yes, that's what's happening. A cheaper labor force. And that's also affecting the markets altogether. So don't be shocked when the Democrats allow a bunch of illegals to come here and they try to pull on their heartstrings and go, they just want a better life. Yeah, they know to come over here because they can make a ton more money stealing our jobs. Do you think they're spending that money here? No, they send it back home. So it affects our economy. Sure, they're cheaper labor, but a vast majority of them are paid under the table. So there's no taxes, there's no anything. The market is a time bomb ready to explode. Those of you in riskier assets are going to get hit hard. Cryptocurrencies have not been through any real major crash at all. There's no way to know how they're going to perform. So although you should be diversified, limit your risk in cryptocurrencies because this is going to be the first time we see how cryptos react to a market crash. And the fact that if you look at cryptos, you can see the charts over here. See how most of them move together? Look at this. Look at this. Same here. Same here. See the charts? See how the pictures all look the same? That's not a good indication. They all should move independently of one another because of the use cases, because they have different uses. The fact that they all move together is a terrible indicator that if Bitcoin goes, they all go. 96% of my money is in gold and silver. I do have cryptocurrencies. I'm diversified, but I'm limiting my risk, and so should you. One thing's for sure, you should be protecting your investments altogether, and that protection is gold and silver. So when I suggest that you move 25, 30% of your monies into gold and silver, it's for a reason. Inflation is going up. Your money is becoming less valuable. The dollar isn't purchasing what it used to before. The purchasing power is being dwindled away. Anyways, that's it for now. You guys hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel, and I surely do appreciate it. And I'll catch you later. I'm out.